Hello and welcome to this short video debrief of the Budget 2021. In this video, we'll be looking at changes to capital allowances. In an effort to unlock surplus funds held in the balance sheets of UK companies, the Chancellor has announced a new super deduction. For 2 years, commencing on the 1st of April this year, companies invested in most plant and machinery that qualifies for the 18% main rate pool will receive a 130% super deduction in the year of expenditure. In addition, the capital expenditure previously qualifying for the 6% special rate pool will receive a first year allowance of 50%. This new allowance is unlimited, making it attractive to large businesses. The current annual investment allowance capped at 1 million is also available, and we will need to plan the allocation of the annual investment allowance where expenditure does not qualify for the super deduction. Graham, can you talk us through an example for the new super deduction?
Yes, of course. Let's consider a haulage company, for example, looking to invest in 5 new lorries at, say, 100,000 each. Under the current annual investment allowance rules, the 500,000 investment will receive a 19% tax saving of 95,000. Compare this to the same investment rules made from 1st of April 21, and this will enhance the tax saved by 30% to 123,500. Overall, the new rules save 28,500, assuming that there are no significant profits made to cover the investment. There are also changes to the rules for loss carryback, which could also help where investment levels exceed available profits. And this is being covered in our first business tax video.
That does sound inviting, Graham, and given the unlimited nature of this relief, there will be big businesses out there that have an opportunity to save significant tax. Take the Chancellor's example, for instance. A large company investing 10 million into plant will now receive 13 million deduction rather than the current 2.62 million. This would reduce their tax burden by nearly £2 million. If large businesses buy into this, as the Chancellor intends, I can see this having a real positive impact on the economy. There must be some pitfalls we need to be aware of, Graham.
Yes, unfortunately, it would not apply to expenditure on contracts entered prior to the 3rd of March, and in exclusion surrounding used and second-hand assets.
So buying brand new is key then?
Absolutely. And if you sell the asset before the 31st of March 23, expect any profits or any proceeds to be enhanced by 30% before you pay tax on them at 19%.
Good to know. Although from the 1st of April 23, corporation tax will be at 25% for many companies, so proceeds will be taxed at similar rates. Tell me, Graham, has there been much of a change to company vans?
Well, company van acquisitions will benefit from the new super deduction we have discussed, with only a small increase in the taxable benefit to £3,500 for the van and £669 for the fuel.
No major changes there then. For many years now, I steer clients away from company cars as quite often the taxable benefit is far too great. The exception to this has been electric cars, and I truly believe if an electric car can accommodate the mileage range you require, then you should consider purchasing one through the company. Graham, can you remind us of the benefits?
Certainly. I'm aware of a number of clients that benefited from this. Take, for example, the Tesla Model 3. This will cost about £42,500. The company can get first year allowance to deduct the full amount against the profits, saving £8,075. The taxable benefit in kind is only 1% in 21-22 and 2% for the 3 years from 22 to 23. So next year, a higher rate taxpayer would pay about £170 tax to have a £42,500 electric car. That sounds pretty good to me, doesn't it?
Yes, I quite agree. Some opportunities there. I think that covers the main points on capital allowances. If you have questions, please get in touch in the usual way. And don't forget to look at Nigel and Craig going through the changes to corporation tax rates in 2023. Goodbye.